would say deep water offshore is trending positively. We invested over 5 million US in rental fleet. Our returns on rental are fantastic. When you're first to market with a technology, delivery times are important to be able to take advantage of that position. When you're doing something like this, when it does get commercial and we sell it, it's got to work.
Good morning, everyone. It's Harold Leishman here, Senior Investment Advisor with CG Wealth Management and one of the founding partners at LLC Private Wealth. Today, we're going to be looking at McCoy Global. We've been buying the stock here in the $2 range. It's a name that the partners own and our clients typically own. Per usual, we're looking at our data set for the company. If anybody wants to have a preview of names we're looking at or see how our process works, feel free to drop us a line at llc@cgf.com. We're always happy to share ideas or talk about small cap stocks. Things we see here on the chart that we like. Revenue has been growing around the 15% mark. Stock trades at 3.5 times earnings, and earnings are growing at about 37%. Let's now talk to Jim, the CEO, and see if this growth story can continue. Here we are. Hey, Jim, thanks so much for joining us. We've also got Alex on the line as well in case we need some additional input. Jim, as you know, we've been following McCoy for some time. I'm a shareholder. We've got lots of clients who are shareholders. Just want to get a bit of an update for them to remind them of why they own the position and what they might look forward to. So McCoy trades for about 3.4 times enterprise value to EBITDA. Trailing 12-month EBITDA is around 13 million, and you've got about 7.5 million in trailing 12-month pre-tax income. Those are all fantastic numbers. Until recently, revenue has been growing quite rapidly, sort of north of 30%. Q4 of last year, you guys kind of noted that Q1 might be a bit softer, and indeed, it was flat, I guess, versus the same quarter the previous year. Any sort of comments on whether we should be concerned? Is this a trend that's going to persist, or what can you tell us about that?
Well, first of all, thank you for having me today, and happy to talk about the McCoy anytime. When it comes to our Q1 and the revenue, I don't think there's a real need for any reactionary concern. Our business can be lumpy, number one, on a quarter-to-quarter basis, just when large orders are shipped, whether they're sitting on the dock, and timing of revenue. Sometimes our international customers and getting things on containers on ships don't fall in line with our quarters. That's one thing. But when it comes to where are our markets today, in the Eastern Hemisphere, particularly the Middle East, North Africa region, that market remains quite strong. Quoting activity still remains robust in that region. Deep water offshore, we did an announcement recently. That market, after about a 10 or 12 year downturn, is making a renaissance, I would call it. And we already picked up a very nice contract. So I would say deep water offshore is trending positively. In the North America land market is where you're seeing continued declines in active rig counts. In 2023, the rig counts went down 20%. In the North American land, but our revenue had the largest growth in the U.S. land market. So we're counteracting the downturn in the North America land market by introducing new technologies that customers obviously find value, because in a down market, it's tough to get CapEx out of them. But if they get a good return on it, they'll buy it.
That's fantastic. And yeah, certainly. And that's the problem with any sort of business attached to, something cyclical like energy, to be able to hold your own in a declining environment is really great. So the other thing I noted, just sort of looking at our sheets, is, since Q4 2022, the company's been consuming a fair bit of cash. You've consumed about $10 million cash off the balance sheet. Where have you been putting that money? I see it hasn't been going to G&A, which makes me happy. That's been pretty flat. So where are you investing the money?
Well, I'm glad you noted the G&A, because we do continue to want to run a tight ship. That's our style. So we try to keep our overheads down. Our CapEx, our capital's allocation and cash, I guess, first and foremost. Since December of 2022, we invested over 5 million US in rental fleet. So
Okay.
that was a big chunk, and that rental fleet has, our returns on rental are fantastic. So we're not shy to invest when the opportunity arises for us to invest capital in rental fleet. Second, in 2023, we probably returned over $3 million back to shareholders in the form of share buybacks. We
Mhm.
spent over 2 million, close to $2.5 million in share buybacks. And then we increased our dividend. So between the two of them, we spent over $3 million in returning cash back to shareholders in those two ways. And then the third way is that we spent some of that cash is investing in strategic build plan inventory on our new technologies in particular. So as we're introducing these new technologies like the flush mount spider we had so much success with last year, there's some very long lead time items, castings and things like that come from overseas that we have to invest in, because when you're first to market with a technology, delivery times are important to be able to take advantage of that position for sure.
Yeah, first mover advantage is always
Yeah,
a great place to be. And I must admit, so I'm not a technical person when it comes to drilling wells. Can you talk about your flush mounted spider, and what problem does that solve for? And kind of what is the scale of the problem? If you can kind of dumb it down for me in small words and pictures.
sure. Well, I'll just sticking to the flush mount spider. Um, the biggest problem it solves, number one, is safety. Um, Without that tool, you're using two individuals that are standing right at the most risky area of a drilling rig. We call it the red zone, and they're pulling manual hand slips all day long. Lots of back injuries, finger injuries, and even impact from falling objects. And so the E&P companies, your Oxys and ConocoPhillips and all those companies, the one thing they take a tremendous amount of action on is accidents on anybody that's drilling a well or providing any service for them at their well site. And so being able to remove those two people, number one, from the actual drilling floor with our flush mount spider, and the second thing is we eliminate one of those folks, which is a cost, because you only need one individual remotely operating that tool. The second thing it does is provides better efficiency and better ways to communicate with the driller, whether the slips are open or closed, and less chance of dropping a string.
So I think you've mentioned before that this is just sort of the first leg or the first piece of a larger platform that you're deploying. Can you talk about what other problems are you solving for, when you expect to have it to market? And why don't we start with that, and then we can carry on after that.
Sure. The flush mount spider is a component that we've developed that's part of what we call an integrated smart TR integrated package for running casing. In North America and around the world, in the land applications, customers have been running casing the same way for 50 years. And there's been little effort put into automating that process. And up until, I would say, 10 years ago, that status quo would have been a hard nut to crack. But the issue our customers are having is labor. 50 to 60% of the cost of running casing today is labor. So when we listen to our customers, over the last 10 years, particularly before we embarked on this technology roadmap journey, the biggest complaints we got is recruiting people, crews, casing running crews, training them and retaining them. Nobody wants to do that kind of work, and it's expensive, and they're in remote areas and dangerous. So because we have a full suite of products in the casing running, and we also happen to have a business outside of Austin, Texas, that is experts in applying sensors in harsh environments on equipment to provide real-time data very accurately. We thought if somebody's going to automate that and reduce that headcount and that biggest cost and the biggest problems our customers are having through automation, and again, applying much better safety, efficiency, and wellbore integrity, we should be the ones to do it.
Right. Yeah, you're not the only company I've talked to where labor issues are problems that need to be solved for. There's definitely a shortage of skilled labor out there, or people that want to do the more manual style work. So so how big is this overall opportunity that you're, I mean, how big is the drilling market in North America or globally, and what's the size of the nut you're trying to crack here?
I think, well, if we look at globally just for casing running services globally, there's probably $1 billion a year spent on labor. But let's maybe bring it down to our region, North America. In North America, probably half a billion dollars is spent on labor running casing. So our objective and what we believe our integrated package is going to provide our customers is reducing that headcount by 2/3.
Oh.
So the opportunity is to take 2/3 of that $500 million spend on an annualized basis. And, our objective is to get our piece of that savings.
Right. And of course, I know you don't just deal in North America, you're also very active in the Middle East. Can you explain how you expect to get, well, first of all, when is this more comprehensive package expected to launch? And how do you expect to get it to market?
So we expect, and we've communicated, I think, fairly consistently that we expect that full package to be commercial in 2025. And the reason is because we have to go through, we've done test rig trials and things, but we need really robust data and strong field trials in actual customers' wells as the last step to make sure that when you're doing something like this, when it does get commercial and we sell it, it's got to work.
Right. So first half of 2025, I won't hold you to January 15th, but we'll give you the first
Okay.
half to start generating some results.
Yes.
And how do you expect to get it to, is there a sales strategy to get it to market? What's sort of what's your plan there?
Well, in North America and the Middle East, what we'll be doing is like we did with the flush mount spider and other technologies over the years we've developed. Adoption takes in our industry and our customer base. If we just go there and say you should buy this thing, doesn't always work, but they like to buy in. So when we did the flush mount spider commercialization, we took demonstration units, demo units with our field service people, said, look, we'll show you how to use this, try it for free. We'll put it on there. You can use it for a month. And then a month comes, we want our tool back. And they say, well, you can't have it back. It's working. So, and news, and like if you go into a place like the Permian Basin, that kind of information travels fast. And so we started getting inquiries very quickly from all other customers. And our target is typically the largest players in those markets to be the first ones to trial, because they're typically the first adopters. So when it comes to the Smart TR package, we will take it out, prove it, and then start to show them that they don't want it. They don't want to send it back.
That's always a great strategy. Have you got enough inventory on hand? I know your balance sheet is very strong, with still 10.5 million in cash. Do you have enough inventory to fulfill sort of that initial layout of kind of tried for free, or will you have to invest more in additional inventory?
Oh, there'll be some like the initial packages that we put together that we're going to go and trial with customers. We can manage that, no problem. We've got prototype tools right now working as we speak this week. We're doing some trials on a test rig on one of the key components that's gonna kind of finish off the package. So yeah, we'll have enough horsepower to have the inventory ready for trials. And then of course, as we start to get orders, then we'll ramp up.
Right. And you didn't mention it in this conversation, but I know you have previously. Part of the package is a machine learning component, so that the process will make drilling or laying
Casing running.
casing running much more efficient on a go forward basis. Any early indications as to what that level of improvement might be, or is that too early to say?
It's a bit early to say, but what we do have, we've got the software all developed. It's machine learning. We've got an algorithm working in the background, collecting all that historical data, and some of the early results are actually quite fantastic. And what is our software going to do? There's a human element to experience that historically has been required to make decisions on whether a connection's a good connection, bad connection, whether they should open and close the slips. There's a bunch of experience and things that have left the industry, which is causing our customers a lot of grief. And then there's mistakes, and that's when they have problems in the field. But our software is going to take away a lot of that experience requirement from those folks, and it'll just direct the activities using our software.
Fantastic. All right. I mean, I didn't mention at the beginning, other than the low earnings multiple, but as you've got 10 million in cash, you're a $55 million market cap company. You've got about $35 million in inventory. So the valuation component is quite clear. And I guess it's just a question of waiting to see what the sales results are in the end of 2025. We'll give you the full 12 months to see if you can sell something. And and hopefully the energy markets hang in. I've no doubt they will, and we'll sort of see how it goes from there. But I really thank you for taking the time to talk with me and give my clients an update. Really appreciate it.
Appreciate the time to tell the story. Always happy to do it.
Thanks, Jim.
All right.